Questions, please raise your hand, yell out, whatever you want to do. We do have a spare mic here so we can move around a little bit as needed. But as we're going through this, I want to make sure that you all are getting your questions answered. Are we okay with the... Are they? Okay. I can hear a noise. I don't know if you all can hear it. I just killed your mic. All right. I've got like a lot of noise here. I can talk through it so long as they're not hearing it. It's okay. Okay. All right. So Gail, when she had reached out to me, she had asked if the department could come today and talk about all of the new reports that you all have seen this year. And all of the different changes to the budget process. So that is largely where we're going to focus. I do have some other questions kind of at the end, just wanting to use this opportunity to get some good feedback and see where we need to head for future purposes. But before we get started, I wanted to see if I can have a show of hands of folks who attended the AIC webinar back, I think, end of August. Okay, so just a couple. All right. So a lot of this information is going to be what we covered during that webinar. So if you haven't seen it already, that's totally fine. You're about to get it. And if you have already seen this, or at least parts of it, I'm going to try to explain a little bit more. We've got a little more time to walk through things. And again, like I said, questions are really going to be where this presentation becomes the most helpful. So as we talk about something, if you have a burning question on it, please feel free to raise your hand and let us know. So with that, here is my general plan for the day. First, we're going to talk about the past, basically what reports we have released. So this is not so distant past, really just this past summer. And talk through how those were all calculated, kind of what assumptions are buried within those reports, and how that ultimately can end up playing out when we get to our final budget certification. Next, then, talking about the present and how we go about incorporating this information into the budget review process. Future, where is this headed, both from the standpoint of the department's reviews of your budgets, for this year, and then also where will this head for future years. And then lastly, like I said, I just have some other feedback type questions that I really just want your opinions on so we can better target where we need to focus. So let's start in with the recent reports. So the month of July, affectionately known as the month of reports for the DLGF this year, we released, 7 different types of reports, actually more than that because some of the reports had multiple versions of the report. In total, well over 20,000 pages worth of reports that were prepared this year and released in the month of July. And pretty much all of these reports were brand new reports. So as you can imagine, it was a very busy month with a lot that we were kind of sorting out as we went through it. I think we have learned quite a bit by going through this process. But up on this particular slide, what I have here are just the various reports that we did release, and we will actually walk through each of these, as well as the dates on which they were released. That way, if you're seeing something and you're saying, wait, I never really saw that, or I never took a look at that in as much detail as I maybe wanted to, all of these reports can be accessed by going to the DLGF webpage and then going to our county-specific information page. When you get there, up at the top, you'll have your options to select your individual county. But if you scroll down just a little bit, then you'll have a listing of all of these different reports. So as we're talking about these reports, something to keep in mind is that these reports are estimates, and we do have that kind of plastered throughout these reports. At the point in time that we were doing these particular reports, there's some information that we knew, and then there's certainly going to be some information that we would not have known in the month of July. And so as I said, all of the reports that we released are estimates. They were based on the information that we did have available to us at the point in time in July that we were preparing these. And then we also went through and tried to make sure that we were documenting where we had made different assumptions. So the other thing to keep in mind here is that because these are estimates, these are also non-binding, and so they are subject to be updated as we go further down this process. So let's start in with the estimated maximum levy report. This was the first big report that we released, and quite honestly, out of all of the different reports we released, outside of local decisions, this report is a report that should pretty much be what you expect to see when we actually work your budgets. Now there are a couple of local points that you may actually change, but for the purposes of this year, we had gone through a process to modify the maximum levy calculation so that it would allow us to compute these maximum levies much earlier in the year. So this particular report, especially not so much for counties, but for other unit types that don't necessarily have much in the way of levy adjustments and things like that, the number that shows on this report is essentially what their maximum levy will be for this coming year. Now for county purposes, you all are a little more complicated because you do have levy adjustments. So we'll talk through how that will change. So on this report, the next few slides, what we're going to do is walk through each of the different items that are on this, where that data came from, and then also kind of some context on what can happen as that changes. All right, so the starting point for this report is going to be your 2016 maximum levy. And so if you are in a former Cadgett county, this would be your maximum levy after PTRC. So if you actually had access to your 2016 1782, it's on your 1782 notice. It's in this report that we call the maximum levy report. And specifically on there, it's called the maximum levy limit subtotal. As I show up here, it's about 2/3 of the way down that slide, or down that report. So if you're trying to see where we even started from, that's where you'll want to go. And as I said, for Cadgett counties, we are actually looking at a post-PTRC number, and that is because we have gone through the process to uncouple your income taxes from your maximum levies. So we no longer will have that tie between what was PTRC, we're now calling it something a little different under the new lit statutes, but what was PTRC and your maximum levy. To that amount, we would have added any permanent appeals that you may have had. We don't see these as often for county units, but for example, cities and towns, they may have an annexation appeal. That would be a form of a more permanent appeal. Whereas at the county level, probably the most common one that we see for counties would be a shortfall appeal, and that's a temporary appeal. So if you did have one of those, that would be a temporary appeal and would not actually show up on this particular calculation. Next then, we made the FIT adjustment, and this was something that came out of the legislation this past year from Senate Enrolled Act 321. Historically, we had a financial institutions tax adjustment that occurred, and it had to occur all the way at the very end of our budget review process. And so our thought being that the whole goal of 321 was to try to get you all better information sooner, we needed to eliminate as many steps as possible that required the full budget process to be completed. So the FIT adjustment was one of those things that we changed. And what you can actually look at would be on your 1782 notice from last year, on your fund report at the bottom, we have a calculation that shows how close you are to your working maximum levy. That's actually the only place where you see that FIT adjustment documented on our old reports. So if you are wanting to double check where that number came from, that's where you would go back and look at that fund report in your 1782 notice. So what we have done is, For this year only, we are taking last year's FIT adjustment, making it a one-time permanent adjustment, and then from here on out, that number will just grow by your assessed value growth quotient. The other benefit of doing this is that you all no longer need to certify to us bank personal property AV. That was the calculation that utilized the bank personal property AV. So you may have also noticed as you've gone through your certified net assessed values that we're no longer asking for that information. And it's simply because we're doing this one-time adjustment, and then from here on out, in future years, we actually won't even have this particular line on the report anymore, because it just will have been taken care of for this year. Next then, we have what we've titled just other adjustments to maximum levies. These are very situation specific. I think we have 3 or 4 where we've seen some unit consolidations, or the levy needed to be modified for a particular reason. These are very few and far between. So that gets us then to what we've titled the 2016 maximum levy that is eligible for the growth quotient. So this ultimately is going to be the number that we will grow by the assessed value growth quotient. So that's the next step here. We say times the AVGQ, which for the 2017 budget year is 3.8%. So obviously, as many of you know, over the last several years, the AVGQ has been significantly lower than this, down in the 2.6 to 2.8% range. So we did see good growth on AVGQ. We actually are anticipating that growth to continue for the next couple of years as well. So stay up in the 3.8 to 4% range. So with that, then we get to our initial 2017 maximum levy. And then this is where we start to do a bunch of other adjustments. So first we have the annexation factor. And I don't have too many notes on this one because this is going to be more specific to your cities and towns. But for cities and towns, they do have the ability to actually automatically grow their maximum levy based on an annexation. They actually can go one of 2 different ways. If the annexation is large enough, they may come in and do a full levy appeal to us. Or if the annexation results in a growth of less than 15% increase in their assessed value, then they can just go through this automatic adjustment that we will do. So then we get to our 2017 annexation adjusted maximum levy. Here's where we start to add in some of more of the local decisions. So first we have potential 2017 appeals. We call these potential for a couple of reasons. One, the data for this particular item, this was data that we gathered through a survey that we did at the very start of July. And I know we didn't give you all too much time to actually respond to us on that survey. That's something I'll talk about in a little bit that you'll see a modification on moving forward. But if a unit did report to us that they were planning on doing an appeal, then for the purposes of this maximum levy calculation, we have assumed that that appeal will be approved, and it will be approved in the amount that the unit has requested. In reality, both of those assumptions are not necessarily good assumptions. What we do see is oftentimes the appeals may be approved, but once the department does its budget review, or does it review its review, oftentimes the amount that's approved may be lower than what the unit originally requested. But for the purposes of these calculations, we have assumed that those appeals are being fully approved. That gets us then to our estimated new maximum levy, and then, or actually no, we add in our estimated new maximum levies. Again, for counties, we're not really seeing that. We do have a handful of units throughout the state who may have been newly established, and that's where those would be showing up. And that gets us to our 2017 maximum levy prior to the allowable adjustments. Next, then, we get into 3 different adjustments, all of which county units have the ability to do. So the first one is the estimated 2017 cumulative capital development adjustment. This adjustment has changed a little bit from past years. Historically, there was a two-part test associated with this adjustment, and it was not solely tied to your cumulative capital development fund. So the first part of this prior test did look at what was your levy for your CCD fund. The second part of the test, though, took a look at the total levies for all of your cumulative funds and compared that to the cumulative fund levies from 1984 for your county. And then whichever of those two was the lesser of the two, that's the amount that the adjustment actually was. In order to simplify this, we actually got rid of that second prong of the test. So now we are only looking at your levy for your CCD fund. And while I think that that makes this simpler in terms of the overall concept here, I do know that there are some units who maybe historically had actually received their levy adjustment based on the second prong of that test, the 1984 test, and unfortunately ended up losing out on this levy adjustment for this year because they didn't necessarily have a CCD fund. So that is something that we've adjusted here in this calculation. As I say, this is counties and cities and towns only. In terms of the number that we have placed here, we've had to make some assumptions because ultimately what we will be looking at is your actual levy for your CCD levy, or for your CCD fund. So we had to come up with a way to estimate what that levy could possibly be. And in order to do that, what we have done is we've taken what we've computed as your CCD maximum rate. I'll talk about that in 1 second. We've taken that maximum rate and then we've multiplied it by your 2016 assessed value, net assessed value, but we've grown that assessed value by the assessed value growth quotient, or 3.8%. And the thought being here is, again, we're trying to get to a levy on what's really a rate-controlled fund. So we needed to have some assumptions on where your AVs would come in. What we saw from the ratio study process was actually that gross assessed value was growing by about 3.1% throughout the state. And so again, to be on the conservative side, we went ahead and just went with the AVGQ at 3.8%. But that certainly is an area to be aware of, that if your assessed value is not actually growing at 3.8%, then this number will come in lower than what we have up here currently. Your CCD maximum rate, we'll talk about this again in a little bit when we talk about the cumulative fund reports, but essentially what we have used there is your 2016 certified rate, unless you had already gone through the process to reestablish it, or you indicated to us during the survey that you were going to reestablish that fund. If you indicated that you were going to reestablish, then again, we've assumed that you have reestablished it at the rate that you indicated. The one other thing I want to make a point on with this particular top bullet point, oftentimes people will say the CCD fund is outside of the maximum levy. And I totally understand why it's probably easier to think of it that way. But what you'll hopefully consistently hear from the department is it's actually inside of your maximum levy. It's just that we make an adjustment, an upward adjustment to your maximum levy for that fund. We've had some confusion, especially over this past year, we've had some confusion where people are talking about that fund being outside of the maximum levy, and so they're trying to take some liberties with it that they really can't do because it is inside of your maximum levy. So as much as possible, that's the way you'll hear us talk about it. It's inside your max, but you get an upward adjustment on your maximum for that levy. All right, next then, moving on to mental health. This is a levy adjustment for county units only. And so this amount that we have estimated here is your 2016 maximum amount times the assessed value growth quotient. And that is the official calculation for this particular levy adjustment. It is an appropriation amount that we are calculating. Now, there are certainly opportunities within the statute for locally to determine that that number is higher than what's actually needed, and we'll talk about that. But for our purposes, we are assuming that you are providing that full maximum amount. Lastly, then, we have the estimated maximum developmental disabilities adjustment. Again, this is for counties only. And this one, we did make a modification on this process. Historically, this calculation was based on a tax rate times your net assessed value. We went ahead and this year modified that calculation again so we can try to release this information to you sooner rather than later. Since our calculations were having to be done in July, prior to you all completing your net assessed values in most cases, what we did was we kind of borrowed from the mental health adjustment, and so now this calculation will take your 2016 maximum amount and grow that by the assessed value growth quotient. And that's what you will see from here on out with this maximum adjustment amount. Developmental disabilities is one of those areas that, unlike mental health, which is more of a requirement, this one is more optional at the county level. So while there is a maximum amount that is allowed for the levy adjustment, there's not the same language in statute that says that you shall provide that amount. So I do know that essentially all of the counties are not currently providing that maximum amount, or at least we're not in 2016. Can't speak for 2017 yet. But for our purposes, again, we have assumed that you would be providing that full maximum amount. On all of these, kind of the consistent theme that you'll see with us is that we are trying to be conservative in how we have estimated these numbers. So adding together the originally calculated maximum levy and then these various levy adjustments, ultimately that gets us then to the estimated 2017 maximum levy. So for a county unit, what can change on here? Certainly, if you ended up actually saying, yes, you were going to do an excess levy appeal, and it was not currently shown on your maximum levy report, that would be an area where potentially this maximum levy could increase. Your CCD adjustment, if you ended up going ahead and reestablishing your fund, but we had not considered that in our calculation, that would be an increase. Or on the flip side, if locally it was determined not to take that full maximum rate, then you would be experiencing a decrease on that particular levy adjustment. And then as we stated, with the assessed value, really this will be highly dependent on what has actually transpired with your individual assessed values. So if your AVs are growing by more than 3.8%, your CCD adjustment could also increase above what was shown on this particular page. Or if your AVs have not grown by 3.8%, then you would expect that number to decrease. On the mental health adjustments, as I stated, while this is a you shall provide, there are also some options within the statute that allow for a lower amount if it is determined that that lower amount is sufficient. And so if locally you've decided that you would not provide that full maximum amount, then you could see a decrease here. And then similarly, your developmental disabilities adjustment, if locally the decision has been made to provide less, then you'll see a decrease on your maximum levy. So if I were in your shoes, what I would be doing is something like this, where I would print out my particular page, and then I would just scribble all over it and make whatever adjustments I need to make to it. That way, as you walk through this, then you get a better target maximum levy for what you should actually expect. So just for example purposes here, I've got Adams County. I said, oh, they decided while they were going through the budget process, they were going to do a $200,000 shortfall appeal that we had not accounted for. So I'm going to show that increase here. And then similarly, I said, okay, they're not going to give the $514,000 in developmental disabilities. They're only going to give $150,000. So I've changed that number, kind of redo the math on it, I get to a new maximum levy of just under $9.7 million. So one thing that I really like about this report is that we have done as much as possible to show each step along the way. So hopefully it is easier for you all to modify this and make it more reflective of what's actually going on with your individual budget adoptions. Before we jump off of this report, did you all have any questions on this particular report? All right, next then we're going to jump into the cumulative fund report. So what we have here is that for each unit we went through and identified their various funds that would be cumulative funds or rate controlled funds. And we've prepared a report to show, at least in our initial estimate, what that maximum rate could be for that cumulative fund. So during our budget review, the process that we go through with your cumulative funds is that ultimately we will take a look at three different things. We will take a look at what you actually adopted. We will take a look at prior year's certified rate. And then we also will take a look at the maximum rate cap. So many of you may be familiar in the 1782 notice, you have that cumulative fund report where we walk through and we do a comparison of AV trends over the last like 4 or 5 years. And ultimately that gets you to what that maximum rate could be. The way that that formula works, the maximum rate will only decrease. It will not actually increase based on those adjustments that we do on that report. So for the purposes of trying to estimate what the cumulative fund rates could be for 2017, we have assumed that the maximum rate from last year would be the same maximum rate for 2017. Now what will happen is when we actually do our budget review, we will go through that same calculation and see if there are any adjustments that need to be made to that rate based on what has been occurring with your assessed values. So it is possible that your final 2017 maximum rate ends up being lower than what we have shown here. All right, same concept here then for a county unit, what parts might change. If you ended up doing a reestablishment, as we mentioned, this would increase. If your local adoption is actually less than the maximum rate, then these rates would end up decreasing. And then, as I mentioned, the trending calculation, we will actually apply that trending calculation. So through kind of no action of your own, it's possible that this overall maximum rate could actually decrease. All right. Next then, we get into the line 7 worksheet. And this was something, just in the process of trying to provide units with as much information as possible, especially about the various revenues that they could possibly receive, I felt that this one was important to provide to you all. And in a way, we're taking a calculation that historically we've done behind the scenes during our budget review process, and basically we put it on paper and gave it to you so you can see exactly how we're doing this. So the goal of this particular worksheet is to help you complete that line 7 number on your Form 4B, which would be your December property tax collections. And the way that we look at this will be that for the majority of funds, we will start your calculation from the lesser of your 2016 certified levy or your 2016 abstract levy. So for most units, that abstract levy, that's going to be lower because you're going to have circuit breaker impacts hitting that levy. So oftentimes it is the abstract levy that we're really using as our starting point. The exceptions that we have to that, though, are noted here, and the main one for you all are going to be debt service funds. For debt service funds, we actually we require that we will start from our certified levy. And the concept here is that if we started from your abstract levy, to determine how much more revenue you should receive in December, then in the end, we would actually end up levying more in your debt service fund to make up for the amount that you lost to circuit breakers. And statutorily, we are not allowed to allow a unit to levy to make up for circuit breaker loss. So for debt service funds, and then these other special type of funds, we will always start from your certified levy. From there then, well, let me stop. So on our report, you can actually see that we've done this math for you. What we have listed here is both your certified levy for 2016 as well as your abstract levy. And then the middle column there of numbers, we're calling that just the starting levy for your line 7. So for debt service funds, that will equal certified levy, and for all of your other funds, it will equal whichever one is less. So for your purposes then, with this particular worksheet, what you can do is actually drop in your June 2016 distributions by fund, do the subtraction, and then that will ultimately result in what you can use as a good estimate for your line 7s for your budget forms. As I said, this is basically the exact process that we go through during our budget review time. By dropping these numbers in now, you'll just have much more accurate levy calculations prior to actually submitting to us. All right, any questions so far? Okay, all right. Next then we're gonna move on to what honestly was my favorite report out of all of these reports. This report is the estimated miscellaneous revenues report, and the push behind this particular report was the elimination of the auditor's certificate. So as many of you know, the auditor's certificate, in addition to providing information about assessed values and abstract levies, on the back side of that certificate, you also were asked to estimate miscellaneous revenues for each of the units. So when the push was made to do away with the auditor's certificate, the department needed to step in and still be able to provide that information. And so this was kind of our response to it. So what this particular report does is that we are going through and providing estimates of all the different types of miscellaneous revenues that a unit may be receiving, at least the miscellaneous revenues that the department will actually review, potentially modify, and the ones that we have data on. This will not include home ruled revenues. As always, those are revenues that you all know more than we do, and so historically what you've seen is when those come through on the budget process, we will not modify those, but there are a handful of different revenue streams that we will actually modify and update to our numbers. So for the purposes of this report, what we've shown are both what a good estimate of that revenue could be for the last half of 2016. So ultimately what will become your column A on your Form 2, or line 8A on your Form 4B. And then a budget year 2017 estimate. That would be your column B on your Form 2, or 8B on Form 4B. In addition, what we've tried to do here is to tell you exactly where this number came from. Most of these numbers, especially for county units and cities and towns units, a lot of these numbers are actually based on the revenue estimates that the Auditor of State's office put out. So as much as possible, we've actually shown that calculation in our summary statements. There are a handful, though, where we had to make some assumptions. And so again, we've used those comments to document to you where we made assumptions. The biggest thing that I would say on this report is it is 8,000 plus pages for all the units, and almost all units have more than just one page. So be sure that you are going in and printing out all of the pages that are applicable for your unit. The main question that we have received on this report is that we released that report on July 29th, And in it, there were estimates for the amount of local income tax revenue that a unit could expect to receive in 2017. A few weeks later, we released local income tax reports. So the main question that we have received is, which number do I use? And the August 18th numbers that are focused solely on local income tax revenue, those are the numbers that at this point in time you would want to be working with. For the purposes of this miscellaneous revenue sheet that we released in July, we made an assumption that your revenues would be decreasing by 10%, whereas the August numbers are actually based on real data that we received from State Budget Agency on August 1st. Now, given the timing of this particular presentation, I would actually say we are getting ready to update these numbers one more time. As hopefully many of you saw, the State Budget Agency on Friday released the updated numbers for the certified distributions. So if you have had any local income tax rate changes over the last couple of months, you'll want to double check those, make sure those are properly accounted for. And now the department, we have 15 days to update our unit level distributions. So probably not this week, but you should see those next week coming out with a more updated number. Now, one other thing to keep in mind with local income tax revenue, you actually have until the end of October to make those updates and have those impact for budget year 17. So even though we're getting ready to release what we will call the certified distributions, if your county is still going through the process of modifying your income tax rates for 17, we will actually release one more update in November for any counties that have made adjustments here in October. All right, estimated debt service levies then. This report was probably the most difficult. Well, for my part, I did a lot of these and then Matt did a lot of these too. So the reports I worked on, this was the most complicated one. And so part of the problem is, how do you assume which debts need to have a levy? How do you know which payments need to be made? And so these were some of the challenges we worked through as we were going through this process. All right, so where we ended up with this particular report is that we ultimately went back to the debts that were certified within the 2016 budget. So we had, I think it was about 32 or 3,400 debts across the state that were included in budget orders in 2016. So we started from that point. What that does mean is that there are going to be some instances where a unit may have actually already done new debt in 2016, but that will not be included in this particular report. While we attempted to do that, it became a situation where we were having to make some decisions as to whether or not that unit would need a levy. And rather than making those assumptions, we backed off to stick with the information that we knew. So for the debts that were included in the 2016 budgets, what we did then was we went back into our gateway applications, both through the debt worksheet that's submitted with the budget forms, and then also the debt management report and the amortization schedules on the debt management report. Using those two pieces of information, we went through a process to try to identify which payments would be due in 2017, as well as which payments would be due in 2018, because that will ultimately impact the operating balance. The one thing that I would say about this, though, is that this was dependent then on the debt worksheet data being accurate. And what we found was that there were some instances where perhaps a unit had identified what we call a line 11A. So in this case, it would be the payment due in the first half of 2017, because we're talking about the 2016 budget forms. But maybe they had not identified an 11B. And so where those data entry errors may have existed within the forms, unfortunately, those are going to flow through into these calculations. Again, we have some ideas in mind for how we can address this for next year, but that's just kind of something to keep in mind. If you're looking at this and saying, this doesn't seem quite right. Why are these payments changing so much? Some of it could be due to the way the information was presented within Gateway, and kind of the way people had identified the payments to be paid. So again, what we've tried to do here then is identify for 2017 budget year, we tried to identify what the last payment would be that would be made in 2016, what payments will be made in the budget year, and then what payments would be made in 2018. So once we had all of those different pieces together, our next step then was to try to estimate what the levy would come in to be based on those numbers. Again, at the point in time that we were actually completing this process, we were somewhat limited in what data we had. And so probably the biggest assumption that we made and the biggest impact to the debt service levies that are shown would be this first one, in that the June 30 cash balances were assumed to be at 0. Certainly we know that that's not necessarily the case in all debts. In fact, for most, it's probably not at a 0 for June 30. Because you are allowed on a regular basis to maintain that operating balance. But given the information that we had at that point in time, this was the assumption that we ran with. We also made some assumptions about what the December tax collections would be, as well as the miscellaneous revenues. Again, we've assumed those to be at 0 for the debt service fund. Again, we know that that's not going to play out the same way. Once we have actually computed your debt service levies, we would still do the same spread of your license excise, your CBET, and your FIT as we always have. So we do know you will have miscellaneous revenues to your debt service fund, but at this point in time, we made the assumption that it would be at 0. So based on those, we've estimated out what the debt service levy would need to be. And I would say debt service and cumulative funds specifically, those are funds for which we will be doing a full budget review during our actual budget review. As many of you may know, there is actually an opportunity to go through more of a shortened review for your levy-controlled funds. But debt service levies, especially since those are need-driven funds, we will have the same level of review on those as we always have. We will look at each of your individual debts, make sure we agree with what payments need to be made, and do all of the same calculations we have historically done. So these debt service levies that we provided in July are absolutely estimates, and we will get to the actual debt service levies in a few months here when we start our budget review process. So again, kind of going down this theme of how could this debt service levy change from what was originally estimated. So I've listed out just a number of different ways. One would be the actual amortization schedule. So this kind of is addressing that situation where maybe we saw some data entry errors on some of the worksheets that we had coming from Gateway. When we actually go back and look at the actual amortization, could go either way, an increase or a decrease, but probably more likely to show an increase than a decrease. If a unit has issued new debt, at this point that won't be included in our estimates, so that certainly would be an increase. If you've done a debt refinancing or if you've retired debt, especially for a refinancing, well, a retirement, we certainly would expect that to be a decrease on your levy. A refinancing, we would anticipate it being a decrease, but there are certain instances where that might actually be an increase. Once we drop in your actual June 30 cash balance, again, we would expect that will drop the debt service levy. When we drop in your actual December tax collections and your actual miscellaneous revenues. So we will modify all of that as we go through our process to get to a true debt service levy. All right, so the next step from here is circuit breakers. So before we jump into that, do we have any questions about anything up to this point? Am I hitting on the points that you guys needed to know or wanted to know more about? Okay, all right. Well, we will jump into the property tax caps then. All right, so for property tax caps, Basically what ended up happening was we had all of this information that we just kind of walked through, especially all of the estimates of the rates and the levies. And we took that information and now we had to go through and estimate property tax cap impact. This is the first year that we've had to do this during this time of the year. And so certainly, as you just saw with all of the different reports that we walked through, there's a lot of assumptions built into those levy and rate numbers. And so those same assumptions will end up impacting the overall circuit breaker numbers or property tax cap numbers. So this report 1 is kind of the main report that we'll talk about here. This is the report that takes a look at each individual unit and says, for this unit, here's what its overall property tax cap impact would be. Now, we did go through and identify within this property tax cap that would be associated with different types of funds. So for a county unit, in a sense, you're not as complicated as some other units that have multiple maximum levy types. So for you all, you'll typically have your civil maximum levy. Then if you had any rate-controlled funds that were actually outside of your maximum levy, and a debt service levy, those are probably the main ones that you would actually see. For other types of units, like for school corporations, they have actually 2 different maximum levies that they work from. Similarly, townships have multiple different maximum levies. Because those different maximum levies may also have different taxing bases, we kept those separate and identified the property tax cap specific to a type of maximum levy. The one thing that you'll note that we didn't do is take this all the way down to fund level at this point. And that's really because that is highly contingent on your local decisions. So we'll talk in a minute. We have provided a tool that you can use to take this overall number and break it down to fund level. But for the purposes of this report, we kept it at the maximum levy. All right, so this report 1, as I said, provides the estimated property tax cap impact for each unit. It is based on the spring 2016 tax bill data. So that is something to keep in mind as you're going through this process and you're looking at your property tax cap impact that was released. So 1, as we talked about with all of the other reports, for those maximums, we were looking to take those to be conservative in nature. Make sure that those maximums are kind of showing everyone's taking their full maximum levy. Everyone's taking their full operating balance. So all of those assumptions that were used to show those maximum levies at kind of the most conservative area, those will now play out here in the property tax cap reports as well. Then we have your 2016 tax data file. So if your assessed values have actually changed significantly from what they were in 2016, at this point in time, we will not have those factors factored in on these estimates. So all of your AVs, deductions, exemptions, as well as your credit rates that you provided, those will all show through. Those were all pulled from 2016. I've already said this a few times, but this is where we will start to hit on it even more. But these numbers are estimates. And I know you all know that, but it's good to continue to reiterate that these are estimates. And these are based on the best available information that we had at the point in time that we were computing these. We will still go through the same process that we've gone through in the past, where we'll do our budget orders, you all will compute tax bills, you'll do your abstract process through Auditor of State, and then next spring the department will release the real circuit breaker numbers or the real circuit breaker report based on all of what actually transpired for the 2017 budget year. So while these numbers are out there and they are good information as you are working through your budget process, please know that these numbers will absolutely be updated actually a couple of times, but the final official number will still come out next spring. All right, so as I said, this is assuming everybody is adopting all of their full maximum levies, taking their full maximum rates. And so in any situation where a local unit actually makes the decision not to take its full maximum rate or levy, that will have an impact on what these property tax cap estimates come out to be. The other thing that's important to remember is that these property tax cap impacts show the impact of all of the different units on each other's budgets and their overall tax levies. So while you may be looking at your individual county and saying, hey, we're not really changing much, but wow, our property tax cap impact significantly increased. What that may be, well, part of it will be driven by the assumptions that we have built in on all of the different reports, but what that may also be would be maybe one of the other units has made an assumption that they're going to do a large appeal. Or some of the other units have gone through and they've reestablished their cumulative funds. So this property tax cap impact report is where you start to see the impact of each individual unit's decision on your actual budget. Then here I just have kind of the two other reports that were also released with this, and these reports were largely released for those of you who are data junkies and you really want to dig in further and you're trying to sort out exactly what changed and why. These are the reports that you want to be going to, and they'll help you kind of hone in on what you should be looking at. So first we have report 2. This is showing a side-by-side comparison between what the certified tax rates were for a particular district and unit within that district, as compared to what our circuit breaker model has estimated those tax rates to be. So obviously county unit, you pretty much should be in every taxing district, but if you're going through this report, what you can do then is look to see, are there certain taxing districts where I'm seeing a much larger change in the tax rate than in other taxing districts. If you identify that, then often you can take a look at those taxing districts and see, is there a common thread? Maybe there's a common school corporation within those taxing districts. So then maybe you drill down a little further to see what's going on with that school corporation. Similarly, we also have here, report 3 is your estimated property tax cap impact by taxing district. So this also can help you identify where do we need to look a little bit harder to see what's going on, maybe with some of the other units, and see how they're impacting us. All right. So before we jump in on this, do we have questions on the property tax cap reports? Or kind of what we assumed, where we head from here with those? Yep. All right, so the question is, what happens when the units or when the estimates that the department provided were significantly higher than what you've actually seen? And I'm going to guess that a lot of you are in a similar boat, and that is something that we did see. And so we will talk about that in a little bit, but the best answer I can provide to you at this point is that what we have said is that while this particular information needs to show up on certain budget forms in certain fields, it is possible for a unit to use their own property tax cap estimates if you would prefer. So I know that there are a lot of units out there who have gone ahead and utilized maybe last year's property tax cap estimates, or if they have a financial advisor that they work with, they may use estimates that a financial advisor has provided. But that's kind of why this is good to be here and kind of walk through all of these with you. This way, by walking through each of the different reports, hopefully you can see why our numbers came out where they came out. And then towards the end of this, we'll actually talk also about what we're going to do moving forward to try to make these more useful to you all in the future. All right. Are there other questions? Oh, yeah.
I've noticed in our review over the last 4 years, ours is about 3 times what the average is. Would I be safe in taking an average of what those last 4 years would be?
Yeah, so in your situation, the numbers came out significantly higher than what it's been averaged over the last few years. I can't necessarily speak to a local policy like that. I think that is one option that people have used, is to look at historical and determine kind of what to do with it from there. But that is a policy decision on exactly what number to use. I'm not sure.
It's this year that would affect that average.
In terms of what you can actually expect when we compute the circuit breakers?
Is there a major change this year that would make that number that we've averaged over the last 4 years significantly higher?
So the question being, is there any major changes this year that might make the averages of the last few years not a valid comparison? I mean, the biggest one is actually going to be that the assessed value growth quotient did grow much higher than what it's been in the past. So that will definitely change things. Assuming that all the units go up and take their full maximum levy, you will see a lot more levy growth this year than historically we have had. So that probably is the biggest thing to consider in terms of new debt issuances, things like that. We haven't fully started the appeals process, so I can't speak to that. But like new debt issuances, I wouldn't necessarily say we've seen a lot more this year than in years past, but that would also be something you can go out to Gateway Debt Management and look at the units in your county to see have they issued new debt. That may be something to consider as you're trying to determine whether or not to use historical numbers. All right. Okay, so here's where we're going to transition a little bit to quote present and what you all are actually doing right now, or potentially have already done, so this may actually be past for some of you. But we're going to look at the impact on your actual budget process. So for the budget process, what I have here is kind of the main code site that drives how some of these numbers need to show up on your budget forms. 6.1.117.3, this is actually the code site that talks about your notice to taxpayers, as well as then kind of your public hearing process. So in this code site, it does specifically say that your notice to taxpayers must include the estimated maximum levy as computed by the department. It does say that it needs to show your estimated property tax cap impact as computed by the department. And then lastly, it also says that a taxing unit needs to consider your net property tax revenue, or what I would call post-circuit breaker or post-property tax cap revenue, when you're actually doing your budget adoption. So that's kind of where we started from was with that particular statute. So then going through and taking that statute and applying it to the budget forms, what that meant was for your Form 3, your notice to taxpayers, the statute was pretty clear. Your maximum levy and your property tax cap impact needs to show on that form, and it needs to be the numbers that were estimated by the department. So for those fields, we have actually populated those fields for you. There were just a handful of instances where a unit maybe was moving through the process sooner than we had those numbers released. But for virtually all units, this information was populated by the department. Both of those fields, though, on the Form 3, those are informational fields. Those do not end up impacting the rest of your budget forms. So again, with your property tax cap impact, especially if you're looking at that and saying, wow, that's That's a lot higher than where we've been in the past. That's higher than I really expect it to come in. That number will show on your Form 3, but it doesn't impact the calculations on the rest of your forms. The other thing to keep in mind is that those fields are non-binding in nature. Those will not impact what we finally ultimately certify for you. So getting then into your property tax cap impact, if you do have a different number that you would prefer to use, you are welcome to do that. So as I said, our number will show on the Form 3 in an informational only field, but you are welcome to use other estimates throughout the rest of your budget forms. Let's see. Yeah, again, there's no penalty if you decide to use your own numbers on this. All of our numbers are non-binding and they are estimates only. So if you do choose to use, whether it's the department's numbers or you choose to use some of your own numbers, what we have done then is modify a number of the other budget forms to account for this. So one of the main modifications has been on the Form 1, or your budget estimate, your line item estimates. So on this particular form, what you've hopefully seen is that we added in a whole nother tab on this form to account for property tax cap impact. And I want to explain some of the thought process on that, because we know that this is not an expenditure that you all are going to make, nor would you want to make it if you had the choice. But as we were going through this process, we kept trying to come up with how do we recognize property tax cap impacts while also staying within our current budget form structure. In a little bit, I'll show you where we ultimately want to head with our budget forms, or at least with the main one, the Form 4B. But due to the timing of this legislation versus the amount of effort that goes into programming and training for significant changes, we couldn't make all of the changes on Gateway that we ultimately want to do long term. So we sat there and we said, okay, we have our current budget forms, how are we going to show this? And what we came back to was that there were typically 4 different ways that units were accounting for property tax cap impact. Because the thing to remember is, while we're trying to show this, we're trying to make it much more open and transparent on your budget forms. The reality is you all have been doing this for several years. You've been dealing with this for several years. So the ways that we have seen that people dealt with this, one was that a number of units would have a line item on one of their Form 1s, and essentially it was a line item that they knew probably was never going to come to fruition. And when they needed to, quote, cut their budget to make up for circuit breaker, that was the line item that was going to go. So that was kind of the first approach, and ultimately that's pretty much the approach we adopted. Another approach that we have seen is that a unit may actually just increase all of their line item numbers just a little bit, again, knowing that in the end they would have to come back and do some budget cuts once those property tax cap numbers come into being. That's kind of the double budgeting that we've seen, and I have no opinion on it, so I don't mean to call anyone out on this one. You know, but that's where we've seen some people will have basically a budget that they will submit to us, and then maybe they have, here's the real budget that we know we're actually going to be working from. You know, that's a situation that A-way units have handled it. We've had a few units who went through and internally looked at it more as a negative miscellaneous revenue. We decided ultimately we did not want to put this on the Form 2 or our miscellaneous revenue form because for right now our Form 2 does not include property tax cap or property taxes at all. And so while many of you all may be able to adjust to that and put that on your form, what we also had to be cognizant of is the whole population of units that we work with. And so our thought was that a negative revenue might cause more problems than it was worth. And then the last way that people have been handling property tax cap impacts, at least from what we've seen, is that some units who are still actually in a situation where they have decent funding they essentially just absorb it within their line 11 on their Form 4B. So they just know whatever number that they have there for their operating balance, whatever property tax cap impact hits them, that's where it will go, and ultimately that number will be lower than what they've actually put on the Form 4B. So as we looked at all of these different approaches, like I said, ultimately we came back to the idea of, okay, let's put it as essentially a line item on your Form 1. That was kind of the best way we could do that for this purposes. So in order to assist units with doing that, as I said earlier, when we released our property tax cap numbers, that's at a maximum levy, that's total for your maximum levy, or the maximum levy type. So part of it requires that you can then take that number and break it down by each individual fund. So in order to assist with that process, we did also release an allocation workbook. This is what the allocation workbook looks like. Essentially what you do is you come in here and you fill in the different blue fields, basically your projected property tax cap credits, the fund numbers that you're levying for, and then also your proposed property tax levy for each of those funds. And then the rest of this workbook will auto-calculate and basically spread your overall property tax cap impact among those different funds. This workbook can be used whether you're using our estimates or your own estimates, but hopefully this is helpful in helping you identify what type of impact you might have per fund, which then can ultimately drive what those budgets are per fund. So we also this year have started talking in terms of gross budget versus net budget. And these are not statutory terms. This is just more as we've been thinking through it and trying to play out how things work through the budget forms. This kind of helped to crystallize things for us. So gross budget, the way that we would refer to that, that's going to be, here's what we actually want to spend. So your proposed budget for actual expenditures plus your estimated property tax cap impact in that fund. On the other side then we have your net budget, which is just going to be your actual proposed expenditures within the fund. And we make this distinction because of the way then this will flow through your budget forms. When we started to think in terms of gross and net, we also then started to think in terms of, you have a set of budget forms that are more internal in nature, and then you have a set of budget forms that I guess I'd say are more external. Those are the forms that the taxpayers are going to most likely see. So we broke those, by breaking those funds into internal or the forms into internal and external. First we focused in on your internal forms. So your internal forms we're generally calling your Form 1, your 4A, and your Form 4B. So on these funds, we will be looking at your overall gross budget. So including your property tax cap impact for each fund. And the main reason for that, as we get to your Form 4B, the reality is most units are taking their full maximum levy. So while the form itself starts from, here's what we want to budget, most units are also going through the process to say, let's make sure that we're taking our full maximum levy from kind of the bottom of the form. And so in order for that particular calculation to continue to work out correctly, we ultimately needed to still compute that levy based on your overall gross budget. So your gross budget will show on your line 1 for your Form 4B. Then you'll notice that we did add an informational field on your Form 4B to show here's what your estimated property tax cap impact is within that fund. On the other side then we have your external forms. So your external forms largely are your Form 3, your notice to taxpayers, and your Form 4, your budget ordinance. So for these, we have actually changed those, and those look only at your net budget. One of the goals of this, in addition to trying to provide you all with more information up front before you complete your budget process, we're also looking to try to find ways that this budget process can be easier for taxpayers to understand, or at least they can get better information about what's actually transpiring with the budgets. And so our thought was, rather than going down the road where we've been before, where pretty much the statute encouraged everyone to adopt high, adopt a high budget, adopt a high levy, the department will come back in later and make those cuts. What we've tried to do here is modify this so that the taxpayers are being shown, here's what we actually want to spend. Now, certainly in some cases, depending on how you've balanced that with what your actual levies are, maybe that number is still too high, and we may still come back in and do cuts. But really what we're trying to do is just get the taxpayers the information of, here's what we want to spend. So that's why your Form 3 is showing your net budget. And similarly then, your budget Form 4, again being more of an external form, we've focused on that net budget number as well. Here's what we really want to spend. Again, knowing that the actual property tax cap impact, it will be spring before that is all sorted out. So we're trying to focus on actual expenditures. All right. So as you are going through the budget process, as you can definitely tell from everything that we've released and all of the form updates that we've made, and as required by statute, you do need to be looking at your property tax cap impact as you're doing your budget adoption. Now, whether that is based on the department's estimates or your own estimates, that's really for you all to determine. As I said, our numbers are estimates only and they're non-binding. But what we are wanting you to do is to basically put it out there that yes, you have property tax cap impact. And again, I think most of you have already been doing this. It's just now we're trying to basically get the budget process and the budget forms up to date to also officially acknowledge that and put that out there and allow you to document that. So while I think because of the large number of changes we've had this year, I think there's been a lot of concern about this, and I think a lot of people view this as very different from what they've done in the past. As much as possible, I would encourage you to think back through to what you have done in the past and how you've accounted for the property tax cap impact in the past. We may be asking you to show it a little differently, but presumably you most likely have already been accounting for this in some way, shape, or form as you've gone through your process. All right, so that kind of gets us through the process that you all are doing right now, having until November 1st to complete your budget adoption process. So next then I want to jump into where that will lead the department as we start to talk about the impact on our budget reviews. So one of the first things I said as we started to talk about all of the different reports that we released this year was that all of those reports were based on the best available information at the time that we were preparing those reports. Right now is essentially the time frame where we are getting the actual information because as you all go through your budget adoptions, that's where we find out here's what you actually want for your levies. Oh, you do have new debt that needs to come on. All of those sorts of things, that's transpiring right now. So what our plan is to update our property tax cap numbers based on actual information that is submitted to us through the budget process. The exact timing on this is still being worked out. We know that it's going to be sometime in the next month or two. But exactly when we will do this in comparison to when the field reps will start their budget review, we're kind of still working that out. But our plan is to take your numbers, use the actual budget adoptions, still using the 2016 tax bill data. That, unfortunately, at this point in time, we don't have updated information for tax bill data or the level of data that we would need. While we do have your certified net assessed values, we actually need it all the way down to parcel level. And so for this year, we will continue to use your 2016 tax bill data. Once we go through this process to update our estimates, then we will be coming back to each unit and working with you on exactly where to head from there. So just be aware that it's not, once you finish your budget adoption process, you're still going to be hearing more from us on exactly where we want to go from here, and we will be releasing additional reports showing updated property tax cap numbers. All right, some other things then as this hits for the future. For future updates, here are a couple of other things that, as I look out, this is where I anticipate some of this heading. And hopefully this will help to kind of piece all of this together and see from the long-range vision where this is headed. So first and foremost, June of 2017, which would be for the budget year 2018. What we have talked about is actually creating a new form within Gateway that we would be looking to you all to go in and submit that during June to help give us the information that we tried to collect through the survey this past year, but we'll actually go down the road of more of a Gateway form for this. So the type of information we would be looking at would be similar: anticipated appeals, reestablishments or establishments. Where this will be most beneficial is looking to get additional information about your debt. So if you either had already issued new debt or you plan to issue new debt in 2017, we would ask you to kind of do a preliminary debt worksheet. This certainly, again, would be a non-binding type of situation, but whatever information you could give us sooner would help us to fine-tune our property tax cap estimates as we go through this process. Similarly, we would be looking to see if we can get an estimate of your June 30 cash balance, especially for your debt service funds. That will help us to fine-tune those debt service levies. And then likely we'll have some form of a component that is similar to our existing debt worksheet, where for your existing debt, you can actually go in and identify, here are the payments I know I'm going to make in 2018 and 2019. So that way we can, again, include more accurate, more actual information as we go through and do our estimates for budget year 2018. After that, a couple of other updates just to be aware of. One of them would be in 2018 for budget year 2019. The deadline for cumulative fund establishments will actually change. Right now, you have to get everything to us by August 1st or 2nd. This will change it to make it May 1st. And similarly, that same year for budget year 2019, we actually will also have a new data file that we will be asking county auditors to provide to us at the time that you certify your net assessed values. So August 1, this will be parcel level certified net assessed value data. So where I said now we continue to go back and use your 2016 tax bill information, this will allow us to use more up-to-date assessed values as we're doing our estimates. Then the one other much more major change that I anticipate coming is converting the Form 4B. And the exact timing on this at this point is unknown. I would say within 2 years. But as we go through this process, if you think about your Form 4B, one of the reasons why Senate Enrolled Act 321 really started was because of the way that Form 4B currently shows. Because it starts from how much money do you want to spend, and then it kind of works down to, oh, well, here's how much money you might actually get. And it's, at least from a paperwork standpoint, it's a backwards process. And what I have heard, thankfully, what I've heard as we've gone out and we've talked to people about this is, especially for more sophisticated units like counties and larger cities and towns, fortunately, most of you don't necessarily think about the budget process that way. You actually think about it from the standpoint of, here's how much money we actually are going to have, and then you work back to your budget. But I would say, especially for some of the smaller units that are out there, because the Form 4B starts from, here's what I want to spend, that's where they start from. And so we want to modify that. We want to flip it, essentially. And I don't have the full mock-up here. This is literally things that we have just been mocking up on whiteboards at this point, so the exact details will be to be determined. But the long-range goal would be to say, let's start from your property tax levy, probably your maximum property tax levy. Then subtract off of that your property tax cap impact. So now you're getting to that net property tax levy number, which is what you all are currently really receiving. And I think most of you all are already thinking of it that way. Then from there, once we have your property tax, net property tax levy, let's still add in those other funding sources, your fund balances, miscellaneous revenues. Let's take off all of those other expenditures, temporary loans, assuming that we continue with the same 18 to 24 month budget cycle being your last half appropriations. And then ultimately the bottom number would be, okay, here's how much I can actually spend. So there's still a lot to be worked out with this. There's a lot of programming that has to change, both on Gateway and within some of our internal programs, as well as you can imagine the amount of training that will be necessary in order to take a form that we have all known and loved for 30 plus years and basically do away with it and introduce something new. It will be new, it's still basically the same concept, but it will be a new form and a fairly significant shift for a lot of units to change the way that they think about that form. So again, as I said, official timing to be determined on this, but generally speaking, this is where we see the changes from 321 heading. And so I would highly encourage any of you, if you're looking at this, and especially if you're looking at this and saying, wow, that's terrifying and there's no way this will work, the sooner we get that feedback, the better, since we haven't really started building it yet. Or if you have other ideas about how we can improve this budget process, by all means, we are absolutely open to those ideas. While we administer this process, you all are the ones who actually go through it. So you are going to have a much different perspective on how this should actually be done. And we definitely value your ideas on what the right way is to go about doing this. All right, before I jump in, I have one last kind of section that is more of a feedback area, so hopefully I can rattle your chains enough to get some feedback. But before we do that, are there thoughts on kind of what was presented here in terms of your budget adoption process, what the department will be doing over the next few months, or maybe where we're headed long term? Okay, so the question was, will the debt issuance information be within DebtMan or within more of the budget forms? I'm assuming you're thinking of the debt issuance for the purposes of like this new June 2017. That probably would be more in a standalone type form, possibly very similar to the existing debt worksheet, where you could put in anticipated debt issuance if you don't already have it in DebtMan.
Are there any, for your Form 1s, if you don't put the property tax credit on there, what happens?
That is a good question. So yeah, the question being, if you didn't put property tax cap impact on your Form 1, what happens? I will say there are still some policies that we are sorting out right now. And that actually hits into one of the main ones. So where we are trying to sort out, or what we're exactly trying to sort out here, is if a unit has utilized its own property tax cap estimate. So in this case, theoretically, there's a property tax cap estimate of 0, essentially, because it's not shown on the form. What we would do with that, and how will that ultimately impact our final budget order certification. I think what we do want to have is some level of acknowledgement within our budget order about property tax cap impact. Based on the way everything is headed, I think what we will be looking to do would likely be running with the unit's estimates if they have utilized their own estimate. So in this case, essentially showing a 0. What I foresee, and again, none of this is finalized at all yet, but what I foresee will be that there will be some form of statement within the budget document or budget order that indicates X amount of property tax cap has been assumed within this fund. But those are some of the last policy decisions we're kind of sorting out right now. So, because trust me, your budget field reps, they are chomping at the bit to get going on budget reviews. Just so you know, they're ready to go. At this point, it's really me that's not ready to go just yet because we've got these last questions to figure out. All right, are there other questions? Okay, so now I'm going to turn this into a little bit of feedback area, and I'm going to start with one that I think should get you guys going. Good old County Council review. So as you know, we modified this process this year. And shockingly, I haven't heard much feedback on this at all yet. So I'm going to go ahead and just open that floodgate and ask you, how did it go? Being the new process, I know it's still non-binding, and I know that there's a lot of concerns about that. But this new process of what the councils were asked to review versus what they had had in the past, how did that go? And how can we better assist with this process? And if you all tell me that County Council review went seamlessly, I don't know what I'm going to do. We got somebody over here? All right.
I think it was just a little bit confusing for the taxing units. Our council decided to go ahead and invite them to come because that was optional. So there were several taxing units that did come, and they just weren't sure if they were really supposed to present anything or give the council anything, which, you know, we gave the council, and they just seemed to be really not quite sure what exactly was expected of them. So that's pretty much what happened in our county.
Okay, all right, yeah, and that's good. That's good to know. Were your council members overwhelmed with the new information, or were they able to sort through it, or? Go ahead, Dan.
Well, they still were not very enthusiastic because it's non-binding, and our council, you know, they respect that each unit governs themselves and decides on their own budget, and they're still not willing to provide any influence on them as far as limiting their budgets and levies and rates. Of course, we're in the fortunate situation where we're not impacted by tax caps yet. once we become impacted by tax caps, then that whole attitude may change quite a bit. As far as the information we're reviewing, I think it's more meaningful because we're actually looking at what will potentially be or could very well be the levies and the rates and that the units are going to be adopting, of course, those that are appealing for an excess, there's going to be some, which we don't have very many this year, but so I think the information's more meaningful. We're looking at more meaningful information. The council still isn't very enthused about the whole process, but they did not invite any units. We did have a couple show up because I think they thought they needed to, but they reviewed the data. It was recorded in the minutes, and we went on. So.
Okay.
Can you explain why solid waste is a binding review, especially for our county? They're completely separate, their own entity, but we always are held accountable for their budgets.
Sure. Yeah. So there is within statute 6.1.1.1720 that essentially requires if a unit has an appointed body, that they are then subject to binding adoption by a board that is made up of elected officials. So pretty much all solid waste districts fall into that category. I would say most special districts, fire territories, well, fire districts are different anyways, those automatically come through council. But most of those special districts will be binding adoption units. And the thought, that actually started a few years back, and I think the legislature's thought on it was that they wanted elected officials to make those decisions rather than appointed officials. So that's kind of why that exists. I do know that for some they view that in a similar vein as the county council review, because here you are having to take action on a different unit that you're not necessarily up to speed on. So, but. All right, a couple more. Oh, go ahead.
I'm sorry. I just have a question. If the solid waste is binding, our solid waste budget year is different than everything else. So by the time the council sees it, they say, what's the use? Because they're already into their budget year.
Okay. That's the first I have ever heard of that. I knew that there were some schools that are fiscal schools. I've never heard of a solid waste district being on a different calendar year. So does your solid waste district have a levy? Do they actually do a property tax levy? Okay, all right. I would have to look into that one a little bit further. Like I said, we have actually in the state, we have 2 schools that are on a June 30 fiscal year. But that's the only other time we've encountered that. All right. So I have a couple other things, just in, again, trying to get feedback about where we head with things. So first, as many of you know, 1782s, those will be coming out. Like I said, your field reps are chomping at the bit. They'd have them out the door already if they had that option. And so just kind of wanted to refresh everybody's memory. Here's what all is included in that 1782, all the different reports that you may see. But are there other things? Are we missing things that are important to you? Or is there other ways that we should be trying to get this information to you? And I'll throw one out that we've always kind of, or I've had bounced around in my head quite often. Every year we have at least 1 or 2 situations where we basically go through the entire budget process. We certify the budget order, we send you all the rates, and those rate files going down by unit and fund and district. And post-budget order, then we find out, no, that particular unit should have also been in this district or that district. And I think some of that's being addressed more clearly now through the way that we handle Gateway. But one thing I've always debated is there another report that maybe would just go to county units that would show, essentially it's like the step 3 of CNAV, so it would show for each unit, here's the funds and here's the districts we have it tied to. I'm not necessarily wanting to create more work for you all at an already busy time, but I'm just wondering, would that help to eliminate some of the post-budget order things that we end up finding and having to amend for? Or are there other reports that you would find helpful in the 1782? And if not, that's okay too.
I guess you're asking that, and can I ask what the intent would be? Have you gotten requests from the units for that information, or?
I think our main intent with that would just be to try to ensure that before we certify the budget order, that we have everything properly tied. I mean, we certainly would like that the units themselves are able to sort that out and identify that when they respond on our 1782. The reality is, with the way that we currently show the AVs on the 1782, they get one number. They don't necessarily see, I'm in these 5 taxing districts. And so their ability to identify it may be limited. Now, I struggle to say that it's on the county auditor to also take a look at this, but just trying to figure out ways we can avoid some of the amendments we've had in the past.
I think that would be a good report. I think that would be a good verification to do myself.
Okay. All right. Then similar vein, going to the budget order. As you know, our budget order, these are kind of the main parts that we currently include, your taxing district rates, which those we do include at least the prior year rate. We have the appropriations for certain school corporation funds, and then the approved budget, net AV, levy, and rate by each fund for each unit. So this is, to me, this particular budget order format has existed for many, many years. We actually, over the last few years, we've modified the way that we create this form or this order. So we do have more flexibility with it. So long as we have the data, we can find a way to put it in the budget order. So that's kind of my question would be, I know our budget order gets to kind of the heart and soul of what people want to know, but are there other things that you wish were in the budget order? Or similarly, are there other ways that you want us to release the budget order data? For example, a common comment we have heard is, trying to push us to release things more in Excel form or something like that. And we do that with some of the budget order data, but for example, we have not at this point released like every unit's 16-line statement in Excel form. We actually do that in one county because they specifically request that. But throughout the rest of the state, we don't release that. So is that type of data helpful? Would you utilize it in any way? I don't know. We can kind of be creative on this. Okay. All right. Well, if you don't have ideas now, but something hits you later, go ahead.
Courtney, I really like your gateway forms. I really think it's a good information for the taxpayer to look at. I think ideas that you come up with are helpful for everybody. It's nice for us to be able to tell a taxpayer where they can go to find it easily. I guess.
Yeah, no, that's good to know.
I do want you to know that. I mean, continuing on, I had another thought, but it fleeted. So,
okay, yeah, that works. No, and that's good to know. And again, Gateway is also something that, as many of you know, it continues to evolve. So, as we, if you have other thoughts of things that would be good to have up on Gateway, certainly always reach out. How quickly we can get things done, that may be a question, but we definitely do want to hear what would be most helpful to help you all in completing your jobs. Let's see. So this is my last slide, but before I do this, I will take a moment and give you the update on contract uploads, because I know that's something we get asked about quite regularly right now. Maybe I should have started with this one to really get you all riled up. So the contract upload tool, as many of you know, there was legislation this past year that will be that will require taxing units to actually upload certain contracts onto Gateway. The threshold is $50,000 or more, or 10% of your property tax levy. So for most units, especially for county units, you're probably going to be looking at that $50,000 or more. That legislation actually went into place as of July 1, became effective July 1. If you have been looking for it on Gateway, it is not currently live there. We are working on it. We are walking a fine line on it right now in terms of meeting the statutory requirements of you all providing us those contracts, while also collecting some data from you so that it can at least be a useful tool. If you went straight read of the statute, essentially you all would upload a bunch of PDFs and that would be it. And so how helpful that would be either for you or for others who are interested in looking at those contracts, I don't view that as being incredibly helpful. So we have been sorting through, trying to identify some very basic data points that we can collect, and a process through which we can collect that and try to make it as painless as possible. And that's kind of why the tool itself has not been released yet. We are going through testing on it right now, and as soon as it is available, certainly we will notify everybody through our listserv. But if that's one that you've kind of been thinking about and wondering, hey, am I supposed to be doing something on this and I'm not yet, that is why we have not yet released that particular tool. One other change coming to Gateway that we also are currently working through exactly how to do it. I don't know how many of you actually complete the TIF management report on behalf of your county redevelopment commission, but if you do, if you are responsible for completing that, there will be some additional changes coming to TIF management for the spring. Again, that was driven by statute. They are looking for some additional information about each individual TIFs. And so we are working to populate it with as much information as we have available, but there will still be a decent number of fields that we'll be looking to have units complete. So again, that one is in process. We're actually going through and having some conversations with redevelopment commissions right now. But that will be another area where you'll see some changes come January when that one goes live. Those are the two big ones that I just don't want you to be surprised about when they actually hit. So other than that, this is my contact information. You are always welcome to reach out to me. Always welcome to reach out to your budget field representatives. I know, like I said, they have been going through and doing a ton of checking right now, making sure everybody's getting correctly through the budget adoption process. And so with that, if you have any other questions or comments, always reach out to us. Thank you all.